So here's the S&P chart that we look at. This is the side by side. I have a 2-year weekly, a 6-month daily up there. Sometimes when you have those durations, they don't line up, the patterns don't line up that well, so I'm going to move this out to 6 months and 2 years and then bring it back in and then make sure we get the proper cyclical alignments on the drawings. So this is your weekly pattern right in here. This, you might remember that before the end of the year, I called mid-January to early March as the period of significant risk. Here's the next period over here, July through April. So there's a April through July. So there's I showed you on the monthly that the decline could go out to August. You can see this over here, this shifted cycle that we're having right now going out to August. And that does look like where it's going to head out to. So you can see my projections in here now heading out to August. And this dashed line is reflective of how this pattern is shifting. Now, for those of you that have taken my cycle analysis workshop, we talk about these cycles tend to lengthen when you get into periods of severe selling. That's because once the selling hits, especially when you get these translations where you hold up for long periods of time, once the selling hits, all of a sudden the sellers realize they have problems and they hold off for a while, right? Because they're used to the market recovering, and then all of a sudden when they realize they got a problem, then they have to sell. So the decline stretches out and the cycles shift, and we begin to reflect that in the analysis. So there is a low due right over here, and I'll show you the daily chart, and that low is coming also due on the daily chart, but not quite yet. We talked about end of this week to beginning of next when that low is due. Now the market is trying to find a bottom, and we had a hammer yesterday, I'll show you, and that's pretty good. So now, I showed you on the monthly chart that it's likely that we're going to get a rally period and then a decline here out into late summer, early fall. This is what it looks like on the weekly chart. So what I have is the minor cycles reflected and that dominant cycle, which is now that dashed line. This is the rally. So here are your lower sell zones right in here. The reason we project the lower sell zones is because when you break underneath the cycle low supports like you have here, it reduces the level of resistances to lower prices. We reflect the lower sell zones here when they get up above the 50% number, which right now is 28.35. Then we start to look at how the market may be strengthening. But in the meantime, that's a very small likelihood. Resistances right now are at 25.45, which is not much of a recovery. And we'll call this level over here, the 38%, at around 2,700. So 25.45 to 2,700 is the reasonable expectation for a rebound in here into the spring and potentially very early summer, but I doubt it. Really, it's into the spring here. And then moving to the downside again significantly. Now, we've gotten some reports recently that the China numbers are much, much better regarding coronavirus. Of course, our country is just in the early stages of it, so we don't really know that that is going to be anything that happens here for a long period of time. But that's good news, and we're going to see investors start to look over the valley. But when they do that and we start to get recovery in here, remember that we're facing a very, very long time of challenges and a significant repricing of valuations in these markets. And that's why it's not likely they're going to be able to do much better than this. And when the realization of that comes after we get a rally and we start to move down again, the selling is likely to become very severe. And there's that projection down to around 2,000 sometime in the summertime. So we're looking for a bottom to form in here. That's the alignment that really shows up starting late this week or early next, and then getting into what will very likely be a choppy upward move because sellers really are going to be there through the whole time. And you will find in those time periods, you'll get a day where the S&Ps move up 100 and then probably give back 80 or 50 each time that they do that, because sellers will be waiting in the wings. So that's a look at the intermediate pattern right over there in the stock market, which to us looks very clearly like it has a lot of problems here moving forward, but a potential rally in here. So that's the look at the weekly look at the stock market. Now let's take a look at the daily, and that's not it. That's there we go. Let's just switch over now to the daily pattern right over here. And now you can see this daily pattern. Now we have made a point that, and this is really hard to read right now because the size of the decline has got these scales really crazy. So see if I could stretch this out a little bit for you to see here. The cyclical rhythms that we have in here, right here, this was 22 days. You see that 22 days that you can barely read? This was 20 days to that low. You can see right there, it was barely a low. The market was following the slim ribbon up in this strong upward momentum right through here. This was a 20-day cycle also. And then it gets up here to the fib extensions and rolls over and breaks underneath this low. That was the first breakdown. And then the momentum breakdown right over here that we saw. This was the warnings, and we gave the warnings that something significantly had changed. Now, you can see the slim ribbon turning negative, momentum being very negative. And let's just look at these last couple of cycles right here. And where we are right now, getting down into those support areas that I described on the weekly chart. There's the hammer that occurred yesterday, and then another hammer or doji forming right now. So we've established a level somewhere just under 2,300 where buyers are starting to come in. Now, there's a possibility over these next, we're going to call it 4 to 8 trading days, that this low will be taken out and we'll continue to chop in here. Now, we're so far 13 days of the 20 days off of that time frame. You can see in here it rallied to the sell zone, whacked, broke below that low. That's the sell signal again, and then moving to the downside. Now we have this sell zone in here. That sell zone is really for the bottom of this cycle and then extends into the next cycle. That gets you to this 2,600 area right here, to the 2,700 area right over here, pretty much what we showed you on the weekly. And if we get a big rally in here in these next couple days, it's going to just get overbought very quickly based on this the slim ribbon projection oscillator combo, and they'll be moving down again. So the potential for any rallies to hold right now are nearly zero. And the potential for further declines are pretty good. Now, historically, when you get into free fall markets, on the short-term patterns, the bottoms tend to come a little earlier. The reason is because all of this aggressive selling that you see gets them sold out really, really early. So I wouldn't be surprised if this was instead of a 20 to 22 day cycle, more like a 17 to 19 day. But we're going to watch for that. I'm just anticipating and guessing. The normal would be taking it down to about March 27th or March 30th. For that to be the low of this decline. But when I see the hammer start to form, I start to think that the level's been established and that we're looking at this support zone right over here as the worst case, and that we're going to get into this rally. Now, this period over here begins that weekly pattern right over here. You can see that right over there. I showed you that weekly pattern right here that is bottoming at this point and then turns up. Well, the daily pattern right over here, when we get past that into the beginning of April, that's the beginning of that rally period. The best likelihood of that rally to 2,700 comes in April or beginning of May, right over here, once we get past this time period. So the next several days, maybe as many as 6 to 8 days, 5 to 8 days, there's still significant risk in here. But we're starting to get some bottom picking and bottoming coming in. We're starting to get some news reports that are helping stabilize markets anyway right now. And I think that we're going to see some stability come into the market. Now you can see the slim ribbon negative momentum right over here, and how absolutely fantastic that is. That is the best momentum indicator you can absolutely ever use, in my opinion. It was fantastic through this rally period right over here. You can see that as the slim ribbon was positive through that whole period. And then when you look over here, it's turned negative, and it's been negative through this entire period here of this big decline, all the way since this price level up at 3,200 or so, for this whole 800-point additional decline. So it really tells the story. You can see the support resistances in here, and we're probably in the next week in this bottoming phase, which will still see significant volatility in both directions in here. So that is a look at the stock market.